Now the actual disbursement process is what we are going to talk about. Also, in this particular section of this module, we'll also talk about what happens after the disbursement is over. Once that disbursement is over, there's a lot of post-disbursement activity that ultimately leads to the person repaying the loan and releasing the documents back to the customer after the loan has been entirely settled or repaid. Let's take a look at these two processes, the disbursement and the post-disbursement activity. Now, one of the first things that has to be decided on the day of the disbursement is that is there a physical meet between the lender and the borrower, or is it all been already done? So, for example, some lending institutions will take the signatures on the loan agreement and the other conditions that are there and the other documents that are required to be submitted on a day prior to or a few days prior to the actual disbursement. Depending on what is decided, the location where the disbursement takes place is decided. Increasingly, there is no need for a physical interaction on the day of the disbursement, and all this documentation can be done, as I said earlier. The other important thing is if there are any fees pending to be paid or any documents pending to be submitted by the borrower, they should be collected on this day. And the customer therefore has been told earlier that on the day of the disbursement, please keep the fees ready and keep all the other documents ready also. The other important thing to tell the customer at this point is that all applicants to the loan should be present, or there should be a power of attorney. The power of attorney typically also kicks in either because the customer is sitting abroad as an NRI and he has given the power of attorney to somebody here, or it's an elderly person who, because of physical limitations, is not possible for that person to be available, and therefore the person has given a power of attorney to one of the other applicants who is present on the day of the disbursement. Now, the actual creation of mortgage, the submission of documents, the registering of the same depends upon each city and each state laws. Accordingly, the documents that have been signed have to be submitted to the local registrar or authority for recording the mortgage that has been created by virtue of the submission of the documents. This is typically called an equitable mortgage, and the process, and this has been explained in a greater detail in another module which covers this particular aspect. Once the loan agreement and all documents have been signed and the transaction is complete, then most organizations will hand over a kind of a disbursement or a loan kit. The loan kit will have a copy of the loan agreement, it will have a copy of all the other documents that have been submitted, so that the customer, for his record, has all that available to him for the next 10-15 years while he is repaying the loan. The other documents that need to be collected at this stage are either the post-dated checks for the EMI and the pre-EMI and what is called NASH, a National Automated Clearing House. Now, this is nothing else but an authority to automatically debit the account of the customer on the day when the EMI is due for the next 10-15 years or whatever the term of the loan is. This is an extremely convenient service that is available through the banking system, convenient to the lender because every month then they do not have to go chasing or depositing checks, and convenient to the borrower because all he has to do is to make sure that the account is funded, and therefore automatically on a pre-decided date the EMI will be transferred out of his account into the account of the lender. If this is not a full disbursement and is a part disbursement, then you also have to collect the pre-EMI check because there is a pre-EMI due on the amount that has been disbursed already. If it is a subsequent disbursement, like I said earlier, you've got to make sure that they have collected the pre-EMI also and the person has paid the pre-EMI. Once the loan is fully disbursed and the customer starts paying the EMI, the post-disbursement activity starts. Now, the first step in the post-disbursement activity is to safely store all the original documents that have been submitted to you. There is the loan agreement, the property papers, any other authority approval, whatever is there in the property documents have now been submitted to you. In some cases, if the property documents have been submitted to the registrar for registering the mortgage and the deal, then those documents will be collected by you. Once all the documents are available, you create what is called a docket. Now a docket is nothing but an envelope which is fortified through maybe a stronger canvas or something which makes it safe to be stored for the next 10-15 years, and it contains all the documents that the customer has provided you, which are the original property documents. Now in the normal case, these property documents, this docket is opened only when the person has fully repaid the loan, and you are taking out the documents to give them back to the customer because his obligation to service the loan is now over. However, in reality, it is possible that during the life of the loan, as the customer is servicing his EMIs, he might come asking for a copy of the original documents that he has submitted to you. Whatever be the reason, and if he wants that, most lending institutions will arrange for a photocopy to be collected and given to the customer. Some lending institutions will even charge for that, and most of them will do it without any cost. But that's a decision that is commercial and decided by each lender from a case-to-case basis. This completes the entire process. Of course, recovering it, what happens if the person doesn't pay on time and all that is a separate module on recoveries, which you will be able to follow separately. While this process seems to be a fairly mundane, regular, standard process, I can assure you that from my experience also, there are many changes or deviations that happen during the actual course of making loan disbursements, because there are so many customers coming in with so many different requests and there are different customers requesting different requirements, and therefore each lending institution will have a process to address these variations that we are talking about. Now, one thing we haven't talked about is after taking disbursement, part or full, the customer comes back asking for some commercial change. We talked about it in the earlier part of this module in terms of changes prior to disbursement. Now we are talking about changes after disbursement. The reasons can be similar. He wants an increase in the loan. He's taken a part disbursement and he doesn't want the balance amount. He might be willing to pay a shorter term now, pay the loan over a shorter term, or he wants a longer term. Essentially, this is again reappraisal. You need to find out what he wants, why he wants, and then whether you within your policies and within the regulations can accommodate that request. Mostly these changes, especially for an increase in loan, are limited to within 2, 3, 4 months of after the full disbursement is made, because after that there is no need for more money in the context of the house that is being funded. So this is again a process that needs to be decided by each lending institutions, but there has to be a process. The reappraisal part, getting a new credit report, looking for new tax returns if the financial year is over, asking for bank statements, looking at the record of past payments now that the person has already started paying pre-EMI and EMI to you, and if he has not been regular, you might be reluctant to give him that increase. So these are things that you need to decide, and you need to have a process. The reason we are not going into it, because it's an exception, and typically each lending institution will have to take a call on what process it wants in place for each of these requests that come post disbursement for changes in the commercial terms of the loan. In conclusion, let's take a quick summary of what we've talked about in this entire module. What is the home loan process? Very simply put, there are 8 broad steps, and they're going to appear on the screen in the next few seconds. Just remember, if you are the lender and you're working for a lender, whether it's a bank, an NBFC or an HFC, then wear that hat as you summarize this process, and in fact look at this entire module. If you are a potential borrower, then wear that hat, because ultimately the process applies to both, whether you're a lender or a borrower. It's just a question of from which perspective are you looking at it, and how therefore you are watching your file, whether you are a borrower, again as I said, the application you have made, or you as a lender, the file that you are processing moves through the entire system of a lending institution.